Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is January 30th, 2023, and I'm going to go over your three threes for the week. I'm going to go over our major asset classes, their performance, and our top three favorite on a long-term basis. And then I'm going to go over how the equity and bonds are positioned on a short-term basis. And it's going to be a big week this week. It could be a make or break week. So I'm going to go over our top three market movers for this week. So let's jump on in.
Okay, let's go over the performance of the major asset classes on a week and 1 year return basis, because this will be an eventful week. It could actually be a game changer for the overall trend of the market because we have three big items. We have a lot of tech earnings coming out and whether or not we will have a profit recession or not. We also have some labor market reports that are coming out. And are we in a slowdown or is it just an isolated into certain tech companies? And then we have three major central banker meetings, the ECB, the Bank of England, and our own FOMC meeting this Wednesday, where they will announce whether or not we're going to go 25 bips or 50 bips. So those will definitely change the market. But let's look over the performance of last week. The US dollar aggregate bond and the Treasury bond really didn't move much. They were basically flat for the week. We did have some continued bounces in the S&P 500, NASDAQ, and the Russell. Europe and emerging markets were basically barely up. Real estate, gold, commodities, and Bitcoin, again, they were fluctuated back and forth. On a 1 year basis, however, we are chipping away at those negative numbers, plus some of them that happened in early January last year are dropping off. So we are starting to see down only single digits instead of double digits like we saw in 2022. But the US dollar, gold, and commodities are still your three favorite asset classes over a 1 year basis. All right, let's go over the top three major asset classes. There has been no change this week. We still have T-bills, gold, and global equities, which jumped into the top three last week. I added another little feature today to kind of give a monthly look on what we like. We prefer global equities over US equities. We like mid cap over small cap over large cap. We like energy over industrials, over communication, over tech. And we like short-term bonds over intermediate bonds, over long-term bonds today on a long-term basis. We shall see moving forward if any of those start to flip. All right, let's go over the bonds on a short-term basis. Again, as a reminder, last year, 2022, we were down 13%. So far, so good in 2023. We're up 3% on the bonds. It was basically a flat week, like I said, on the bonds. However, as you remember, we started nibbling and buying bonds back late last year in November, mid-November, and they're still up about 4%. We shall see what this week, if the bonds continue that rally or if the interest rates start to go back up based on what the Fed says on Wednesday. All right, let's look over the equities on a short-term basis. They are actually moving quite a bit. Last year being a big down year. This year, right now, they're up 6%. The January effect is starting to kind of reverberate into the equities on the S&P side. So we started nibbling in early January again. It started to head right into that trading zone that I was talking about, that resistance zone, the 41. It actually hit it. And as you can see from this candle here, it started to pull back. So it's got to get up into that range and kind of hold and break out before we get really excited about the S&P 500 and equities in general. But most likely we will probably trade in this trading range until we get some significant news, and it may be again coming this week. We shall see. All right, let's look over the top three market movers. And again, I can't stress enough, this could be a big week that could change the trend, whether up or down. We don't know yet. Right now, on Tuesday and Wednesday, we do have the Fed meeting. On Wednesday, they will announce the expectations are the Fed to raise by 25 bips, but there are some talk that we could go up to 50 bips for the Fed to send a signal and say, hey, we are still hawkish. We still have to fight inflation. We shall see. But right now, the going consensus is at least 25 bips with a talk of remaining hawkish moving forward. Jobs will be the other big market mover this week. We have ADP private sector and non-farm payrolls, plus the December JOLTS, which is the job openings. And so we'll see what those kind of turn out to be. The JOLTS and ADP come out on Wednesday, and the big jobs number comes out on Friday. And why it's a big number is because right now the projections for the month of December are 185,000 jobs were added instead of 223 the month prior. Okay, so that would be the slowest movement of jobs. And so everyone's watching that because it is a lagging indicator. And if that does come underneath, then that's going to kind of hurt the market on Friday. The other top market movers are, again, the corporate earnings coming in. This will probably be one of the biggest weeks. And are we in a profit recession, or are these companies got a lot of the big tech, Apple, Amazon, Google, Meta, and Exxon, a lot of other big companies coming out. Here's a listing of them so you can see what day they are reporting, but it is important that they not only report good numbers, but what are their projections moving forward. All right, that's it for this week. Thank you for joining us. Our next update is Monday, February 6th. As always, continue to like, subscribe, and comment on these videos, and we shall see you next week. Have a great week trading.